The market has definitely been going in the wrong direction these last few weeks. And I think it's important to talk about why and what's happening, as well as some forecasting of the market over the next few months. So, as we all know at this point, the Trump administration has been really, really keen on imposing tariffs to other countries. Donald Trump recently said yesterday that he was going to continue with his plans to impose tariffs on Canada and Mexico. And he very recently doubled tariffs on China. They were at 10%, they're now at 25%. And because of that, the market has reacted pretty negatively to a lot of this news. And I love this saying. It comes from our founder, Paul Muller. Paul has always said the market can handle good news, the market can handle bad news, but what the market cannot handle is uncertainty. And that's what this situation is causing. The incoming tariffs, of course, some people will argue, well, it's bad news. Some people might argue, well, this is good news. Besides the point of whether it's good news or bad news, I think we can all agree that it's definitely uncertain news. And this is because we really haven't seen tariffs at this level in a very, very long time, really, if ever. And we don't know what's going to happen. And the economy is still relatively fragile as it is entering 2025. A lot of analysts have already come out and publicly stated that we expect an economic slowdown. We don't necessarily see an economic crash or a recession on the horizon, but the economy has really been chugging along at a very fast pace, despite all of the headwinds of high inflation, sticky inflation, still recovering from effects from the COVID-19 pandemic, all the supply chain disruptions, and just everything else going on in the world, all the political issues, the war in Ukraine. I mean, the list goes on and on of all of the red flags out there in the global marketplace that could say, hey, this is going to lead to a market crash or a recession. We just didn't see it, right? The market continued to do extremely well. We saw very high double-digit returns, and I say high double digits, meaning 20, 30%, which for a market standpoint is very, very strong over these last few years. And really what's going to happen is that the market is taking this news into consideration. And of course, it's creating a lot of media coverage. It's creating a lot of uncertainty, but it's reacting very quickly, right? It's very quickly heading down. And I might say that this isn't necessarily a bad thing per se, because we're definitely overdue for a market pullback. Market corrections are a very normal part of market cycles. And when you look at market cycles and say, okay, the market goes up and the market goes down, we're at a point where the market has just gone up and up and up and up and up. And we haven't really seen any down point in the market. So market corrections, again, are very normal. They're healthy. They help keep valuations of companies in check. They help keep them stable. And they really help weed out a lot of companies that truly aren't going to perform well despite tariffs or new regulations or this or that. They sort of help weed out some of the fat, and they bring in or allow other companies that are doing well and mature, or even growing companies that are not mature yet but have the potential to do well. They allow those companies to continue to flourish over a long period of time. So again, I think take the news with a grain of salt. Tariffs, of course, they're definitely scary at how fast they're coming on, and how quickly the rate of the tariffs are going up on other companies. And whether or not you agree with the policies of the Trump administration, we could talk about that for hours, right? That's not my job, right? My job is not to come here and say I agree or disagree with the policies. It's just to say that, hey, these are the policies at hand. This is what they mean, and how can I educate each and every one of you moving forward to make smarter financial decisions. So with that in mind, I don't think it's a good idea to necessarily rush and say, I need to reallocate my portfolio. And maybe a reallocation of a portfolio could be warranted in some circumstances, but an emotional reallocation of your portfolio because you're seeing the market decline is never a smart decision, right? And that's because we don't make good decisions when we're feeling stressed. Human beings, we don't make good decisions when we're anxious or nervous or scared, right? We make good decisions when we have a clear line of thought, we have stable emotions, we're in a good mood, right? And we understand the decisions we're making are not because they're based off of emotion, but because we're making a decision based off of a fact or something that we can likely forecast in the near future and have a good understanding that, hey, I'm making this decision because I feel that large cap stocks are going to do well because earnings estimates have looked strong over the last few quarters, and analysts are saying that large cap stocks will continue to do well over the next 2 quarters, right? That tends to be a smarter decision versus saying, wow, the market is going down because of tariffs, and I'm going to liquidate all of my stocks and move all my money to cash. And no other explanation beyond that, right? So it's really important to stick the course, especially during volatile times. Or if you're not sure about sticking the course, or if you need to reassess the level of risk in your portfolio, that's okay too. Even if at the point some investors might say, I want to completely pull out of the market, or I really want to have a reduction of risk to a point where it misaligns with my overall investment objectives, I think that's okay as long as you have a plan to get back into the market. A lot of folks, what they'll do during times like this is say, wow, there's a lot of bad news, I'm going to pull money out of the market. But then you ask them and you say, well, when do you want to get back into the market? And they'll respond and say, well, when the market's up or when the market's doing better, right? And that turns into the classic situation of buying high and selling low, right? So you're buying something for $10 and then selling it for $5. Then you're buying something for $10 and selling it for $5. You're always going to lose $5 that way. Versus if you say, okay, maybe I bought it for 10. I'm going to sell it for 5. I'm okay with that. But then I want to slowly buy back in as it starts going back up again. Maybe I'll buy at 5, at 6, at 7, 8, 9, and 10. And that way, if the market continues to go on beyond that point, then I've actually made money again and I'm now profitable and my investments are still healthy overall. So again, these are just some tips and tricks to keep in the back of your mind when looking at volatile markets and you want to rush to make a decision. Always have, I think, having a consultant in your back corner, just having someone you can talk to about it that really has an unbiased point of view, right? I mean, that's our role as financial planners, is to have that unbiased point of view and to talk a lot of folks off the ledge a lot of times. It could be a trusted friend. It could be a family member that has an unbiased view toward it. It could be another professional in your life, maybe your accountant, your lawyer. But I think just having someone in your corner that you can just bounce your ideas off of first before making the decision, I think always really, really helps. And of course, it's up to you to take their guidance or not at the end of the day, right? But I think just having someone in your corner to help makes a world of difference. So with that in mind, that the tariffs, I think they're here to stay, at least for the foreseeable future. I think they're going to continue to create some uncertainty and headwinds over the next few months. Again, the economy was always on track to slow down. So the market's taking somewhat of a dip. It's not really surprising to me. I think the surprising aspect is it happened a little bit sooner in the year. I was maybe expecting it to happen maybe a little bit later towards the summer months when more folks are away and maybe some companies aren't as profitable because people are just overseas or traveling and not spending their normal spending habits, right? That's pretty normal. But in this case, it happened now in March, right? So again, it sort of is what it is. I think corrections are very, very normal and healthy again, but just keep in mind that the tariffs are likely here to stay. They're not an indicator of the economy crashing by any means. Tariffs alone are not the red flag and saying the economy is going to crash. The big red flags to me that tend to stick out are a lot of people getting laid off suddenly, right? Do we see the unemployment rate climbing? Do we see unemployment claims coming in very, very quickly? Are we seeing a very large spike in inflation very rapidly, right? Those are all big signs to me that the economy is really on a very poor track. Or are we seeing companies decline to the point where they're going bankrupt, right? Are we seeing companies fail? Are we seeing banks fail, right? Those are all situations where, to me, I would say, okay, now it's definitely okay to panic a little bit. But in this case, I think there's really no cause to panic. I think it's definitely can be stressful if you're looking at your account and you're watching it go down. Nobody wants to see their investments go down. So if you're one of those people, don't log into your account for the next few days. I think it'll just help give you some peace of mind. Don't log into your 401k. That's another little trick, right? Just ignore it. Just let it do its thing in the background. and I think all will resolve itself in time. Again, this is sort of a very uncertain period of time with tariffs of what is Trump going to do? How many tariffs is he going to impose to what countries? At what rate will he increase the tariffs rate? We just don't know, right? It's a lot of question marks, and when there's lots of question marks, the market tends to react pretty poorly, which is exactly what we're seeing. So, again, as a recap, Trump is implementing tariffs. The market is not reacting too kindly to it, but I don't think that it's an indicator of an overall economic downfall. I think it's more of a short-lived and isolated situation that hopefully should resolve itself within the next few months because earnings still look good on the US side. And I mean, the economy still overall is healthy, albeit it is slowing down. I don't expect the market to do what it does. It's still in a healthy position. So thank you so much for tuning in today. Again, if anyone has any questions or this is really top of mind and you want to speak to myself or anyone from the team as just sort of a sounding board, you're always welcome to reach out. Again, that's what we're here for. We're a resource to you. So any questions or concerns, again, please give us a call, send us an email, shoot us a text, whichever method of communication you prefer, and we're happy to help. So thank you so much for tuning in, and I look forward to speaking to everyone next week.